morning and welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Director of International Content, Emily Parker, and special guest, Chief Content Officer, Michael Casey, sitting down today with us he's the Managing Editor of He is filling in for our Managing Editor of Global Capital Markets, Lawrence Lewitinn. Good morning, you two, and welcome, Michael, to the show. What a pleasure to have you here joining us today.
True pleasure. Thank you, Christine. Thrilled to be here.
Excellent. The always lovely Emily. Thank you for joining us. All right, checking in on Bitcoin right now. The XVX Bitcoin price trading just above $57,000. Bitcoin is up about 3.3% over the past 24 hours. And the ETX Ether price right now trading at $17.34. Ether is up about 1.6% over the past 24 hours, according to TradeBlock data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. Okay, so looking at our day's top stories overnight, Michael, big story, Tesla CEO Elon Musk saying you can now buy a Tesla with Bitcoin. Tesla is using only internal and open source software and operates Bitcoin nodes directly. Break it down for us, Michael.
Well, it was a pretty short tweet, so it didn't really have that much in the way of details, but we did kind of know that this was what they would be doing anyway. I suppose the bigger point is that they will be running their own nodes and they won't be converting the funds into dollars. And so that's obviously supportive of Bitcoin generally. It feeds into the narrative, and it's probably the main reason why we got a bit of a bounce overnight and the price is up.
Yeah, big news from Elon. Emily, we're also hearing from this Jerome Powell and Janet Yellen testimony. They've been appearing before Congress. They had a hearing yesterday. They're continuing with the Senate today. They also have been talking about the digital dollar. What have they been saying?
Yeah, so basically it's about time that the U.S. is really seriously talking about a digital dollar. So yesterday there was a conversation about the digital dollar, specifically looking at how to balance anonymity and privacy. So basically what happened in that conversation was this idea that obviously it is not feasible for the United States to have a completely anonymous digital dollar for various anti-money laundering and other crime-related reasons. But at the same time, the U.S. doesn't necessarily want to follow China's model, which is having a digital currency that potentially could be totally monitored by the government. So there's been a lot of comments about this. On Monday also, we had some very interesting comments by Powell, specifically talking about how this is just not going to happen anytime soon. Any kind of digital dollar would have to be carefully considered and would need congressional approval. And the reason why this is relevant is because China is racing ahead with the digital currency. So, I think the U.S. is going to at least need to think about this very soon, because China is going to launch one, potentially next year.
Right. And I did notice from the comments from yesterday, they wanted to strike a balance between having complete anonymity with crypto, as well as, but not monitoring people's financial transactions to the extent that China might be able to do that.
Right.
All right.
No central bank digital currency would be anonymous. So it was a slightly straw man argument.
Right. And joining us now to discuss the crypto markets and more is Delta Exchange CEO, Pankaj Balani. Welcome, Pankaj, to the show.
Thanks, Tristan. Glad to be here.
Great to have you. All right. So news this morning from Tesla CEO Elon Musk talking about offering Teslas for Bitcoin payments. Also, we have news that $5.5 billion worth of Bitcoin options are set to expire on Friday. How is this all impacting the markets?
So, as Michael was saying, Tesla's news is a big catalyst for Bitcoin. In fact, if you think about it, for the last 2 months, Tesla has been providing all the catalysts for Bitcoin. The market participants saw that all the weakness that we were seeing for the last 2 days, that has, the markets have kind of shaken that out. And, today was looking really bullish. We have a very important Friday coming up. It's the expiry week. It's the biggest expiry in the Bitcoin history. We have, like you said, more than $5 billion worth of options going into expiry. And if you see the data from expiry gives us a lot of data to analyze the markets. So if you look at the data, you'll see that overall the trend is really bullish. So we had seen a lot of interest to sell puts and much more than calls. which means that market participants were much more perturbed. So people were happy to write insurance on Bitcoin. People were happy to say price is not going to go below 52, 56, 58, and so on. And we have seen this all the way down till 40,000. So 40,000 is the strike where we see the maximum open interest. Then there is open interest build up on every subsequent $2,000 move up. We had seen 52, 54. Today we have seen a lot of aggressive writing in 56 as well. And it looks like market is going to hold, all these levels become very important supports for the market. And it looks like market is going to, find a base here, and it's already been consolidating for a week or so now. So Bitcoin should look to prepare for its next leg up immediately after the expiry. And that's the trend we saw in January as well. After expiry, markets start to take a fresh move up. So that is really bullish for the market. We have to also realize that 40,000 has become a very important level now. So if you see June expiry as well, 40,000 remains the most sold strike. So that tells you that even from a longer term perspective, participants are seeing 40,000 as the base. And that's also the level where Tesla's first announcement came through, that they have bought 1.5 billion of Bitcoin. So market was around 39 at that time. It climbed up to 44. And then 40,000 became a very strong psychological level for the market. So that's a very important level to watch out for. And between 40 and 60, we have seen a lot of interest to accumulate Bitcoin. And we're hopeful that after the expiry, we'll see a next leg up. So pretty bullish signs all across. And any short-term weakness that we were seeing, again, Elon Musk has kind of washed that out of the system with his tweet last night. And it's really bullish. And it has much more, last week on the program, I was saying even politicians in India are looking at it. Around the globe, people are looking at it. If such a big tech visionary, a sector leader, is going long Bitcoin, you don't want to get into a Bitcoin bout in the wrong corner or in the corner against him. So it's a really big positive for the.
Pankaj, you talked about a $40,000 level as being something to look out for, right? Now, 40,000 is 25% below where we are now. So in an ordinary market, that seems like a dangerous thing to think about as support. But of course, in the history of Bitcoin, it's actually a move that is relatively small compared to where we've come from. So it's natural you would talk that way. But I want to know whether or not, since you have a front row seat into where options are going and how in traditional markets, derivatives, options, all these things bring liquidity, bring a whole lot of more sophistication to the marketplace, and perhaps ultimately lead us to a world where that kind of volatility that you're referring to no longer matters. So you talk about expiries, a big event, your eyes on it. How important now is the derivatives market generally to the evolution of Bitcoin and other crypto markets?
So generally a healthy sign is, or generally a typical indicator is that derivative market is about 5 to 8 times the size of spot market. Now, if you look at equities, you have like 100 trillion of equities, and you have about 600, 700 trillion of open interest in equity options. If you look at daily FX trading, there's about $1.5 trillion of spot trading, but you have about $6 trillion of FX derivatives trading. So crypto is still yet to evolve. Spot volumes in crypto are still only about, still comparable to derivatives volumes. So, spot say trades 20 billion, then derivatives trade somewhere around 20 to 30, some days 15, some days 25. So we have a big factor to cover. There'll be a time when spot will trade X and futures and options will trade 4X. And a larger share of that will be built on from options. And that's what we have been seeing since Jan expiry, December expiry, and the March expiry as well. Every subsequent expiry from here on is going to be a bigger expiry. And we are going to see more and more open interest coming in the options. We are seeing more and more professional institutional players getting into this play and writing options. And 2021 is going to be the year of options for this market. And when that happens, there's more sophistication in the market. So a 25% move down on Bitcoin will be a very big move. And we will stop seeing that happening. We will start to see, yes, a correction will be 25%. That happens in equity markets as well. Markets correct 25 to 30% all the time. But we will not see very large daily moves.
Are you looking at any other coins, any other alts, or just any coins that you think are potentially undervalued, or that we might see some real potential in the next months?
So we've seen a lot of interest in Polkadot. We've seen a lot of interest in ADA. We've seen a lot of interest in NFT sector. So these are the three areas, substitutes of Ethereum, so to speak. And NFT is the subsector in the Ethereum where we've seen a lot of activity. All the interest is there as well. Ethereum in itself is lagging, and it needs a catalyst to wake up. And I think that catalyst will be ERC 1559, which is due in June. Till then, we believe that Bitcoin will kind of outperform Ethereum, and the fact that there's such high fees on Ethereum tends to become a drag on it. It stops participants from going all out on Ethereum and placing big bets. So we need a big catalyst there, and my sense is that that will be the June update. But before that, we don't see much activity there. Even in DeFi, we see, which was the sector that drove up this rally, right? We had seen a lot of activity in DeFi in last quarter of last year, in fact, the whole second half of last year. Now that is a little, if you see DeFi, that has underperformed Bitcoin last this month as well, and that is also in a build-up phase. It will take some time for DeFi to revive. It will take some time for Ethereum to come up. So we think market is going to be dominated by Bitcoin and Polkadot and ADA. Yeah, Christine.
Pankaj, you had also mentioned India early on in the conversation. India may move to block IP addresses of crypto exchanges. The government is taking steps to restrict crypto use. I wonder, is that going to have a chilling effect on Bitcoin?
I see India coming out in support of Bitcoin will be a big positive catalyst for Bitcoin. India coming out and going negative on Bitcoin, that is already kind of factored in. So right now, the state of affairs is that, yes, there will be some policy on Bitcoin, and that will be available either in this session of Parliament, which is going to end on April 10th. And if it doesn't come by April 10th, then it's going to come in July this year. So, but some policy is going to come for sure. Nobody really knows what that is going to be, how strict or lenient it's going to be. Government has given us both the sides of the story. They have said that they want to maintain capital controls, and they're very serious about central banks maintaining its capital control. At the same time, they don't want to thwart innovation, so they want to promote entrepreneurs out of India and build companies in blockchain ecosystem. They want to promote crypto. So they are going to come out with some balanced approach. And till the time we see any affirmative news from, till the time we see something firm and concrete, I don't think market is going to react. I think we can have a positive surprise, because probably India sometime in later this year or middle of this year will come out and give a framework which allows enough room for innovation, which allows enough room for trading. I don't think government is going to ban Bitcoin completely. And that is going to be a much positive factor for the market than how we are thinking that India might ban Bitcoin and that's going to be a negative.
All right. Pankaj, thank you so much for sharing your insights on Bitcoin, altcoins, derivatives, and India.
Yeah, it's an exciting market, and 24/7 there's changes by the minute. So very happy to be here, and thanks for having me, guys.
All right, thanks so much.
Thanks, Pankaj.
All right, that was Delta Exchange CEO Pankaj Balani. Coming up, decentralized exchange dydx, and checking in with our CoinDesk panel.
If I think about what I would like to cover, 20, 30 years ago, it would have been the internet. It would have been the whole social media boom. Now this is our turn. This is this generation's turn to cover the future of money, Web 3.0.
I can't think of a more important story than this one to be telling. We're talking about the transformation of money itself. So to tell this story, the most significant story in finance that's around, we need new mediums, new ways to reach people, new ways to reach this global audience, the human beings for whom this is going to be most important. So this is why we're really excited to launch CoinDesk TV, because it's another way to reach people. It's another way to communicate. It brings to life the stories that sometimes can be difficult to access.
We're going to see a huge paradigm shift. We're going to see how it lives digitally, natively in the internet. We're going to see that transformation shift.
This is a huge opportunity to tell a very, very important story that reaches a wide audience that has the potential to change everything.
We're building a financial system across the world with Bitcoin, several other cryptocurrencies, digital currencies made by central banks, and that is going to be epic.
This is a huge opportunity to do this differently, and CoinDesk TV is going to sit right in the middle of all of that.
All right, love teaming up with Michael Casey in that promo. All right, checking in on Bitcoin right now. Taking a look at the XBX Bitcoin price is trading just below $57,000 right now. Bitcoin is up about 3% over the past 24 hours. And the ETX Ether price right now trading at $17.32. ETH is up about 1.5% over the past 24 hours, according to trade block data. All right, and our next guest is the founder of dydx and CEO Antonio Juliano. Welcome, Antonio, to the show.
Hey, thanks so much for having me.
All right. So you've had some explosive growth recently. Total trading volumes on the dydx exchange hit $2.5 billion in 2020, up from $63 million in 2019. You also recently announced a second round of funding for $10 million. Tell me a bit about dydx and why a decentralized exchange is important.
Yes, absolutely. So we are basically the leading decentralized exchange focused on more advanced financial products and specifically derivative products. The previous guest, Pankaj, actually did a lot of my pitch for me, where he was kind of talking about how derivatives usually trade at like 5 to 10x the volume of the spot market. And in crypto, just in the past year, the derivatives volume has kind of surpassed the volumes on spot for the very first time. And that's exciting. So we see a lot of growth in the derivatives markets from here, but we haven't really seen quite yet kind of a decentralized exchange really take significant volume from centralized exchanges in the derivatives markets. And that's what dydx is really trying to do. We really focus on kind of the most popular derivative product in crypto, which is called a perpetual contract. And that's just kind of a synthetic way to trade any different type of cryptocurrency with very high leverage, and something that's very popular kind of amongst retail or individual traders in the crypto markets. So that's what we're focused on. Kind of our biggest news, which I'm sure we'll touch on in just a second here, is that we're just recently launching a brand new product on layer 2. So a much more scalable product that addresses a lot of the kind of issues with gas fees and scalability on Ethereum. That's currently live on mainnet in private alpha. I'm excited to kind of talk more about that as well.
Congratulations.
Yeah, Pankaj, previously, as you mentioned there, Antonio, highlighted some of these things, and he talked about gas fees as well as being a challenge specifically for Ethereum. Now you've got this project you're running out here, a layer 2 solution, which of course, for those who don't know what that means, it's essentially shifting transactions off chain, if I'm not mistaken, and essentially giving the opportunity, therefore, to remove the congestion from the blockchain itself, and hopefully, therefore, lowering gas fees. To me, that is the biggest challenge for DeFi, along with the fact that it's also extremely difficult for people to understand. So in terms of that first part of it, how do you see this evolving? Is DeFi going to be able to scale, get gas fees down to something reasonable so that, the promise that it supposedly holds of being this new financial system can actually come to bear?
Yeah, absolutely. It's a great question. And I think this will happen, and it will happen a lot sooner than people realize, actually. So the thing that we're building and kind of the partner that we're working with to launch our layer 2 solution, and as you mentioned, layer 2 is just kind of a general term for a more scalable smart contract system that's kind of rolls back up to Ethereum. And the partner that we're working with there is a company called Starkware, which is one of the leaders in a very new type of scaling technology that's a lot of people are excited about, called zero knowledge rollups. And kind of what zero knowledge rollups are, there's some very, very fancy cryptographic math, basically, which you can effectively use to translate an arbitrarily long amount of data. So say in dydx's case, this data is all the trades we want to execute on dydx. And normally, just on regular old Ethereum DeFi, the way all decentralized exchanges work is that when you want to execute a trade, you have to send one transaction to the blockchain. So if we want to, say, execute 1,000 trades on layer 1 dydx, you'd have to send 1,000 transactions. But now what we can do with Starkware and kind of this zero-knowledge proof technology is you can take as many trades as you want. It could be 1, could be 1,000, could be 100,000. And then you run this kind of fancy math on them called a zero-knowledge proof. And the thing that you get after that you do this zero-knowledge proof is you get a constant size data object. Constant size meaning that it doesn't matter how many trades you put into this proof. The proof is always the same size. And then you take this constant size little proof, send it on over to regular old Ethereum, update all the state, and that's kind of where all the scalability comes from, where you can effectively translate, thousands of trades down to this constant size data object, and therefore get thousands of times better scalability. And this is what we've already launched, and this is currently running on mainnet. With kind of real people who are trading real money. We really see the fees now as kind of being pretty competitive with centralized exchanges. And we think that's going to drive a lot of trading volume to the platform.
So that kind of deals with that scaling problem. Another one that we think about when we look at DeFi's potential is just how confusing it is for people. This is a really complex stuff. And once you go into zero knowledge proofs, it gets even more complicated. Do we have to deal with that? I mean, does it matter that people don't understand this? They kind of have to understand, don't they, what these smart contracts are doing with their trades. How important is it that this stuff becomes accessible and understandable to the average Joe?
Yeah, I think it's absolutely critical. And I think what we're really focused on is not necessarily the most naive crypto user. Like dydx's target users isn't someone who just went to Coinbase and bought their first Bitcoin. It's people that are already trading these perpetual contracts on other exchanges. And as I mentioned, just the centralized exchanges really dominate volume, especially in derivatives right now. So there's a huge market for us to kind of move into there. But addressing your question as to whether people actually really need to understand what's going on under the hood, definitely they don't. When you go to dydx, it just looks like a regular old website, a regular old exchange that you can use. We've put quite a lot of effort at dydx into building what we believe is a pretty top-class user interface. And it really just kind of feels like you're using a centralized exchange when you're using dydx. But under the hood, you get all the magic of this being completely non-custodial, this being completely transparent. And this is especially important a lot of times to traders of these more advanced financial contracts, because when you're trading more advanced financial contracts, you're not just trusting exchanges to custody your funds while you're on the exchange. You're also trusting them to execute this contract that you're entering into, in exactly the way that they said they were going to. Whereas with dydx, we can just codify exactly the terms of the contract, the maximum leverages, the liquidations, the insurance fund, all this complicated stuff that goes into derivatives. And we can just put that in smart contracts. It can be audited by third parties. And then everybody trading on the exchange can have a lot of trust that the contracts they're entering into will be honored. And everybody knows exactly how the system works.
When Coinbase filed its S1, it actually called out DEXs in particular and said that decentralized exchanges had an unfair advantage because they had basically more regulatory freedom than centralized exchanges. So I'm kind of curious what you think about that. And also, in recent days, we've seen the FATF basically suggest that DEXs were kind of on their radar, and so it looks like regulation might be coming, or further regulation might be coming for decentralized exchanges. I'm just curious what you think about can decentralized exchanges be regulated? Do you see more regulation coming? And, is this something you're worried about?
Yeah, it's a great question. We work very closely with regulators. We've been in contact with kind of the CFTC for a while now, which is the main derivatives regulator in the US. There are a bunch of regulatory bodies that regulate crypto and finance more broadly. And they all kind of treat decentralized exchanges and kind of the concept of decentralization and maybe more specifically just non-custodial exchanges differently. And in some instances, like it's, on the relatively, like, let's say good side, as, from a business perspective to be a decentralized exchange. And from other perspectives, it doesn't quite matter so much. But absolutely, I think regulators are kind of coming around and are really on the forefront of understanding, DeFi, and are paying a lot of attention to it. And we're excited to just continue to work closely with the regulators to, make sure that there's kind of common sense and regulation that makes sense for DeFi and kind of these just open source non-custodial exchanges as well.
And I noticed that you were looking towards the China market to sort of expanding more there. Can you tell us a little bit about how you see the China opportunity and why you want to do more business there?
Yeah, absolutely. So I think it kind of gets back to our highest level goal at dydx, which is to become one of the biggest exchanges in crypto, period, but more on kind of a 3 to 5 year time horizon. And basically, by definition, if you want to become one of the biggest crypto exchanges, you need to play in the biggest crypto market. And especially for derivatives trading, that is China, and more broadly Asia, but specifically China. We just recently hired our first employee physically in China year on, and she's been doing a lot of really great growth work there. For our new alpha product, we've recently received over 115,000 signups for the alpha. And I believe last I checked, about 65,000 of those or so are in China. So see a lot of hype and kind of potential growth opportunity there. And I think people are excited about both just continuing to participate in DeFi and kind of new DeFi products being able to serve these more advanced markets that are really popular to trade there.
All right. And Tanu, thank you so much for joining us this morning, and congratulations on your new announcement.
Yeah, thanks so much for having me.
All right. That was dydx founder and CEO Antonio Juliano. Time now to check in with crypto Twitter with our tweet of the day. So we've seen a lot of responses on Elon's announcement that you can buy Tesla with Bitcoin. So this one from Expand to Maximum saying, masterstroke from Elon Musk, buy Tesla with cash, and he's going to buy Bitcoin from it. Buying Tesla with Bitcoin makes it even easier. All right. Something to think about. That's it for First Mover. Coming up tomorrow is special guest Visa head of crypto, Kai Sheffield. And thank you, Emily Parker, our CoinDesk Managing Director of International Content, as well as Michael Casey, our special guest Chief Content Officer at CoinDesk. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. And it's Wednesday, so coming up at 10:30 a.m. is Coin Toss for the week's hottest debate with Adam Levine. You're watching CoinDesk TV.